If you've looked at a lot of financial statements, you've probably come across the word audit at some point, and you might be wondering, what is an audit? So here's some information from the AI CPA, but let me break that down in simpler terms for you. So an audit is just a type of assurance service that lends credibility to the financial statements. So, for example, if a company were to put out their financial statements, they've got the balance sheet, they've got the income statement, they've got the statement of cash flows, and so forth, and you as an investor, or maybe you are a creditor, you're thinking of lending money to the company, and you look at these financial statements, you are going to be wondering, okay, is the amount of cash that's on the balance sheet, is that actually the amount of cash that that company has? And you're going to be wondering about the revenue in the income statement. Maybe the company makes a lot of sales on credit. And so you're going to be wondering, okay, the sales that they made, are they legitimate sales or are they fictitious sales? Because the financial statements could be wrong for a couple of reasons. There could be a mistake. Okay, so there could be the numbers are off, the revenue is incorrect because there was an error committed when someone was calculating the revenue for the company, or they could be wrong due to fraud. The company could be trying to mislead you in overstating their revenue. So when companies put out these financial statements, you as an investor or creditor are trying to trust this information so you can make an informed decision about whether to invest or lend money to this company. And wouldn't it be nice if there was an objective third party, which is the auditor, right? That's the role of the auditor, be an objective, independent third party to come in and do some tests. They're going to do some tests and they're going to actually look and see, okay, were those credit sales in fact real sales or are they fictitious sales? So they're going to do these tests and they're going to try and ascertain to the best of their ability whether the information in the financial statements is legitimate. Does it follow generally accepted accounting principles, and is it free from what are called material misstatements? Material misstatement is like this. If we're looking at Walmart's financial statements and Walmart has $500 billion in revenue, and there was a mistake where the revenue was off by $8 because someone made a mistake. $8 is not a big deal. This is a $500 billion company. Nobody cares about just $8. It's just a tiny mistake. We would say it is not material. However, if Walmart's revenue, instead when they say it's $500 billion, if it in fact was really $300 billion and they overstated it by $200 billion, we would say that is a material misstatement. Now, whether it's due to an error or whether it's due to fraud, in either case, you as an investor or creditor would want to know. You would say, hey, look, I don't know that I trust these financial statements as much, or I don't know that I want to invest in the company or so forth if there's this mistake. So the auditor will come in, and the auditor's job is to do these tests and say, okay, can we issue an opinion here? So ultimately what the auditor is being paid to do is give an opinion. They give an opinion, and you'll see when you look at it, if you're looking at the 10K for a company next to the financial statements, you will see the auditor's report, and the auditor will issue an opinion and tell you whether they believe that the financial statements are free of material misstatement. Do they conform with general accepted accounting principles? Okay, so let me give you a quick example. So let's say we've got here we've got the income statement. It's the income statement, actually 3 years of income statements for Walmart. Okay, so here's for the year ended January 31st, 2018. Here is the income statement for Walmart. And now if you look, you see $500 billion in revenue, because these amounts are in millions. Okay, so $500 billion in revenue for Walmart for the fiscal year ended January 31st, 2018. Is that number correct? Can you trust that? If Walmart has an incentive to tell you that the revenue is really high. So how do you know you can trust this? Well, Walmart is required, because they're a publicly traded company, they are required to basically hire the services of an auditor, in this case Ernst & Young, that's the auditor for Walmart, and they went and they performed tests. They went and did tests and they performed this audit, and then they said, okay, look, we did this audit in order to provide reasonable assurance. That's an important point. I should mention the auditor does not provide a guarantee. They do not provide a guarantee that there's no fraud or anything like that. The auditors are always very careful to say reasonable assurance. Okay, they can't ever be 100% sure, but they perform these tests and they say, okay, in our opinion, after running these tests and so forth, the financial statements present fairly in all material respects. There's that word again. Okay, so we're talking about $500 billion in revenue. If it's off by $6, $7, $8, not a big deal. Okay, so we'd say that, and then also that it conforms with generally accepted accounting principles. So the auditor is performing this audit, which is a series of tests. So management, Walmart is making certain representations. They're saying, look, we have gone and done our accounting, and we have $500 billion in revenues. We have operating profit of $20 billion. These are all management representations. And Ernst & Young went and performed tests and did the audit so that they could then render this opinion and say, look, here, investor, creditor, these financial statements conform to generally accepted accounting principles. And in our opinion, there's reasonable assurance we're providing that there are no material misstatements. That's what an audit is.